Hey everyone, this is Keeping It Real with Niki and Kerri, and today we're going to talk about concessions. We're going to learn all kinds of stuff. We talked a little bit last week about the buyer broker commissions and how that was affecting it and how that can kind of relate to our concessions. So we're going to go move forward and we are going to go straight into that. So Kerri, how are you doing today? Welcome.
I'm doing pretty good. Thank you.
So we are a day early, but we're going to post this tomorrow at our normal time, except for our Facebook gets a kind of a preview. So it's going to be kind of fun. We're doing something different this week. So they get a sneak peek at it a day early, and then everything else will be posted tomorrow. But yeah, so we're going to talk because you're flying tomorrow. You're going to California, right?
I am. Yes. My sister that's just younger than me is getting married.
Congratulations. And it'll be probably warmer than it is here in Washington because I'm cold.
They said it's going to be 102 degrees on Saturday at the wedding, so they pushed it back an hour to 5 p.m.
Looking at sunshine.
Yeah.
Okay, so let's get on topic. So we're talking about concessions today. And so for those of you who maybe haven't bought a house in a while, or maybe you haven't forgot what the term meant, a concession is when a buyer is asking a seller, and there's all kinds of different concessions. It could be, you could be asking for closing costs. You could be asking, to help pay for like points or something like that if you want to buy your loan down. So you could be asking for some different stuff as far as concessions that way. So it's kind of like, I guess, like part of your terms that you're working with on your purchase and sale. Right?
It is. And it would come out of the proceeds that the seller receives at closing. So often, they'll put an offer higher than what the actual sales price is so that the seller still comes out with the amount of money that they want to at the end. We just have to make sure that it appraises. So
right. So what that means though, and that's a lot of times like the seller, like especially if there's like multiple offers or something like that in that situation, especially if you're competing for something and you have to ask for concession, or because you don't have, a lot of people have the credit, they can get the house, but they just don't have the cash on hand like that. Because it adds up. But concessions are usually, the closing costs are like 3.5% sometimes, your down payment, and then closing costs are 2.5% to 3%. So you're looking at a pretty big chunk of change. So a lot of people don't have that cash on hand to pay for that, so they'll ask the seller for that. But they also want to make sure that the seller is going to get the price that they're looking for the home, and you also want to be competitive. So it will a lot of times in multiple situations raise that price up a little bit because of that. Okay.
But it definitely makes it stronger instead of offering just asking price and then expecting them to still give you money. The seller often has a number in their head that they want to walk away with. So we just want to be respectful of that at the end of the day and make it a stronger offer when you do submit it.
So that way they all accept it, right? Because they want a certain amount. You're right. Sometimes they negotiate. You can negotiate in all kinds of stuff. And so you can negotiate on that. And, you might say, well, I don't need quite that much, or, and so you might not offer like, if it's like $10,000 your concession, for instance, let's say, you might, I have $2,000, so I'm only going to ask for, $8,000. So it could be something like that too. So you can kind of mess around in the price and stuff that way too. So if your broker suggests going up higher and you're asking for that, that's probably why, because they're trying to, make sure that you're getting a good offer. Okay.
Exactly. Because sometimes the home has sat on the market for a little while. And I've had agents tell me, look, we can do asking price and still ask for a concession. I believe that they'll give it to us because this house has been sitting on the market for 45 days and they want to move it. So it really just depends on the circumstance for sure.
It really does. And, your broker is going to be the person who's going to know what's happening in the market. And, can we go in a little bit lower and still ask for that? Or do we need to offer the full price and, and go above and beyond that to help compensate for that? Okay. So let's talk a little bit, because we're going to go into your area today, because I talked a lot last time and I don't want to talk as much this time. So we're going to go into the lending side a little bit today. So I'm so excited about this because I always learn something new. So with the different loan types, there's different allowable amounts that you as a buyer can ask the seller for, correct?
Correct.
Okay, so let's talk a little bit about those. And Kerri's so nice, and she even has a little cheat sheet up here. So I can't.
And look, it's co-branded with both of us.
Hopefully you can see it. If not, we're going to talk about it. So just, take notes or ask questions. And, we can see comments. So if you're listening to this and you have a question, please throw it into the comment section, and I am watching for that. So go ahead. All right.
Yeah, so like you said,
different percentages.
Yeah, different loan types have different amounts that are allowable to, and what they can actually be used for. So you can't just use them towards your down payment or anything like that. None of these programs allow you to use the seller concession for a down payment. A lot of times they want to see that you have some skin in the game, is basically what that comes down to. And conventional is the only loan that it depends on how much you put down. We call it loan to value. So how much you're borrowing versus how much you are financing, right? Or what the value of the home is. So on a conventional, if you have a primary residence or a second home, depending on how much you're putting down will depend on the amount of seller concession that you get. So the more you put down, the more that you can ask for, which is nice. You can go up to 9% if you're putting down more than 25%. And it's because you're showing you have funds in the bank. If you can afford to put 25% down, they allow you to go a little higher.
Okay. Makes
so
sense.
Yeah. So the amounts are less than 10%. You can get up to 3% in seller concessions. 10 to 24.9%, you can get 6%. And then anything above that would be 9%. And it tells you right there that you can use them on any closing costs, prepaid items, and prepaid items would be your property taxes, your homeowner's insurance, because, especially for the homeowner's insurance, we want a full year up front. So if you can get that year paid for, great, right? And then you can also apply it to discount points to get the rate to be lower for you.
Okay. And I don't know if you're going to know this answer, but I'm going to ask you a question.
Yeah.
Can it also go to like home warranties?
No.
Okay. Is there any of them that do that?
I don't think so. I don't remember that coming up at all.
I think on a VA, and the reason I'm asking, because I think it was but I do believe it was a VA, not a conventional loan, but I believe my client, there was like extra money there sitting on the table that he was able to use that to get a home warranty and have that paid for. So,
I guess maybe I should not say no. I should say, I don't know. So let me find the answer.
Okay.
Just check. It could be allowed. I've just never had it arise. So that's a great question.
Because I know if there was like you said, there was a certain percentage and there was just a little bit left over, and it's like, you might as well use it and, get something to, help cover some of the appliances or whatever. So, okay. All right.
Exactly.
So let's go ahead and move to VA. Did you have anything else before I cut you off completely? Was there anything else on conventional loans that we need to talk about on that?
Just an investment property, you're only allowed up to 2% for your seller concession. So,
okay.
You wanted to go on to VA, you said?
Yeah, let's talk about VA a little bit. I like VAs.
I do too. It's my bread and butter. It's actually what I've been passionate about, and everybody that knows my background knows it's because I'm a spouse and mother, aunt to people that are currently serving. So I like to take care of my fellow service members. And their spouses, I should say fellow spouses of service members. So with that being said, it's a little different for a VA loan because there's a cap on certain things, but not a cap on other things, which is interesting. So there's a up to 4% cap on things such as the VA funding fee, which I don't know if people understand what the VA funding fee is. In place of mortgage insurance, the VA guarantees that if the loan was to default, they will come in and they will be able to rescue the deal, essentially. So the first time a service member uses their VA funding fee, they pay 2.15% of the loan amount. So as you can see, that can eat up a large percent of that seller concession. They're also subsequent use, so you can use it more than once. The second time, you're going to be paying 3.3%. So that would almost take up the entire, but instead of financing it and adding it to your monthly payment, it's an option to have that offset.
Okay.
So, and a few other things that it can cover would be those prepaid items. like the taxes and insurance, discount points for either a temporary buy down or a permanent buy down. And an interesting thing about VA is if there's extra funds, they can use those funds to pay off debt, especially if they need it for qualifying. Say that they're very close and they all of a sudden took out a new credit card, and that credit card just threw them over their debt to income ratios. If they have extra seller concession, they can apply that and have that debt paid off at closing. And so we can get rid of that debt.
Nice. Okay, good.
Yeah, it's really nice.
That helps. I mean, those credit card bills are expensive now. So
yes, they are. The interest rates are ridiculous.
Yep, they are. Buy a house instead.
Yeah. And so there's no cap on borrowers' closing costs or just reasonable discount points. So, a lot of people don't realize that you can only buy the rate down so low before it is not a qualified mortgage, where we could not sell it to one of the agencies like the VA. If we exceed the threshold for what they allow the discount points to be, it's a non-saleable loan and we're stuck with it. So they just want to make sure that you're being reasonable with it.
Okay. And did the VA, do they allow to help pay for the buyer broker?
Yes.
For their
that's something that is helping now. Yes.
Okay.
The VA is allowing that.
And I'm so happy to hear that, because, I mean, when this was originally, and this is kind of going back to our topic last week, but when this was originally like first talked about like 2 years ago, I mean, it's been quite a while now, that was the one, this is the group that I was most worried about, because there was so many restrictions on what they could use and they couldn't use. And it was just, and again, it's like they are coming up with like no money down for their down payment. They have, closing costs can, like, a lot of it gets paid for by the seller. So a lot of the military were coming in, with very little money down, which is what we should be doing for our military, because they are protecting and taking care of us. And, that's their benefit. And, I was really worried about that would knock some of them out of the market. So that's a huge thing. And I wanted to make sure that we definitely address that. So, okay.
Oh yeah, it is a huge thing, because like you said, they don't have to come in with any money down, but they do have closing costs. And when you add that broker's fee, that could throw them out of contention for purchasing a home. So it's definitely a good thing.
Yep. Okay. Let's move to FHA.
So FHA
How's that
has
one
a
looking?
pretty high one. Yeah. You can get up to 6% in closing costs. So here's something very interesting though that needs to be said, is if your closing costs are less than that 6%, you don't get to keep that money at the end of the transaction. It goes to the seller. Anything unused is not yours to keep. It goes back to the seller. So because we're not using it for anything within the loan, it cannot be applied to the down payment like we spoke about. It does the same thing where it goes to the closing costs and prepaid items, as well as any discount points. So as a lender, we're going to just take as much of that 6% as we can. If it means that, oh, you know what, after closing costs, we have $3,500. So let's see what rate we can get with that $3,500 and get you a cheaper rate or a lower rate, with the money. So we try to use up as much as we're given.
Right. Okay. So keep in mind what we said at the beginning though, you guys. So although the 6% there, sometimes it doesn't make sense to ask for 6%, because a lot of times you're putting that on top of the purchase of the house, which also increases your monthly mortgage. So you kind of got to be aware.
Tell you though, 6,000, or when it comes to that type of money, I can honestly say it doesn't make much of a difference in the amount of the payment.
Right.
And I could do the math for you. I could show you what that looks like if you were to take it away or add it. It's not going to be thousands of dollars or even hundreds of dollars difference in your monthly payment. So it's important to ask the questions and see, if I offer this much and ask for this much, what would my payment be? And then if I changed it and offered less. So it's always important to ask those questions so we can do a scenario and show you what that payment looks like. Because at the end of the day, it's all about the payment, because you have that every year.
Yep. And that's things I don't want anyone to hate me because of the payment. I want them to say, oh, I like this payment. It's a good payment. So, and again, talk to your professionals, because that's how you're going to put that offer together to make it so it works for you and then hopefully for the seller. So, okay.
Definitely.
USDA, how's that one looking? We get a few of those because we have some county areas here so we have eligible areas in our county here. So how's that one looking for people who are looking outside of the city of Bremerton?
Same thing, that it's 6% that they can ask. And the thing about USDA is you don't have any down payment for that either. So that's another good program to use. If you do find a rural area, you can use that 6% for that. So yeah.
Okay, good to know. Okay, so so we talked about this already a little bit. We talked about what concessions can cover as far as closing costs. They can do insurance, taxes. They can buy down the interest rate. And we talked about the limits as far as the percentages of what can be covered. But is there different ones for the different amounts, or they kind of fluctuate all over depending on what type of loan and everything else?
The amount doesn't matter. Going back to the conventional loan, it matters how much you put down. That's the only one where the amount changes, but it's based on how much you are coming out of pocket. So,
okay.
One thing I wanted to go back to USDA. One thing a lot of people don't realize is that, yes, it's a zero down, but you can still use that with a down payment assistance program. And instead of using it for the down payment, you apply that to your closing costs. So if you are looking at a USDA loan and you don't want to go with a seller concession, use Washington State Down Payment Assistance Program. You can use that to pay for your closing costs.
Perfect. Okay, good.
Yeah.
The other one we didn't talk about yet is, what about if I'm buying a rehab home, like where I'm going to have to put some money? Will any of the percentages, will that work towards any of the cost of fixing up the home that we can apply to that too?
It won't, because the loan amount is adjusted according to the renovations that you're doing. So, and we also add in a contingency of 10 to 15% for any overages that might occur. So you can use it once, like everything else, to help with closing costs and those prepaid items. But really, when you do a rehab loan, you're not coming out of pocket for any of the renovations. It's all included in the loan.
Right.
So it doesn't really benefit,
So it has to be praised. We'll talk about that.
Right. That's the important part. Very important.
We'll get there at the end. We're going to come up on that. So hold on tight if you're with us. So hold on. Okay. So what about, are there any lender specific rules? Like, does Fairway have something different than, I don't know, XYZ Bank? I mean, are there any differences as far as percentages, or does that make a difference?
These are all guidelines put out by the agencies. So okay. I don't know about other places. I know here at Fairway, we stick to the rules because we want to be able to, make them a saleable loan at the end of the day. But these are all definitely parameters that are put out by each agency. These are their guidelines.
Okay, perfect. Okay. And then I guess we'll go and talk about the appraisal part. So, like we were saying it kind of at the beginning, a lot of times when you're putting in an offer, I mean, especially if it's kind of a competitive market where, maybe there's two and it's really coming down to terms, or maybe you can close earlier than the other party or something like that. And you're trying to make sure that the money's right. So you do need concessions. So you do offer, to get to the full price amount. So you do offer you ask for the concessions of that amount. So you're increasing the purchase price. A lot of times in my experience so far has been that, when the appraiser's coming through and they're looking at the house and they're saying, oh, yep, it was priced at, this amount, but there was multiple offers. And so the concessions and that kind of offsets the cost of that. So that totally makes sense. And they usually allow it. Sometimes though, if it's, you're like, if you were asking, let's say 6% and, and offering extra because you're in you might get an appraiser who says no. I mean, if it's like, you're asking more than, or you're offering more than what the house might be worth. So it does have to appraise. So there's always that.
And yeah, the appraiser uses their own discretion because they're held responsible at the end of the day for the properties that they put as comparable properties. So if they can't find anything in the same square footage and different amenities, that is going to sell, that sold for that same price, they're not going to include it. So it's definitely an ethical thing for them. It used to be that they could be persuaded, but that's why they definitely put some distance between the appraisers and the lenders and the real estate agents, because we shouldn't persuade what the value of a home should be, because it makes for a false market, right? An inflated market. So, and I think a lot depends on the market of whether or not they will allow that. It's very important what you said, that if they look and they see that there were multiple offers, we do submit the purchase and sale agreement with the request for the appraisal. So they see everything that's on there. They see the amount that we're asking for concessions. And so they do take all things into consideration. But at the end of the day, like I said, they need to make sure that it meets the value.
Right.
Instead of inflating that.
Yep. And I get calls, after after homes I've had on the market have sold, I'll get calls from appraisals and they're like, so were there concessions? That's usually the first question. Were there concessions on it? What made that price that? So we do get asked that a lot.
They're doing their due diligence. That's good.
Yep, they do. So, all right, guys, that's what we have for you today. So we hope you learned a lot about concessions and how that works. And you learned some of the different loan types and what those amounts are. We appreciate you joining us. And thank you so much for watching. And make sure you hit that like and subscribe button. Have a great day.